All right, welcome everybody. I'm going to start off today because we spent a lot of time today. We're going to basic financial preparation ideas, ideals, things that stuff that you need to know. Again, a fundamental approach today we're going to do on the program. There's a lot of things that are going on in the markets right now. As I focus on earnings, what's going to happen next. You got a couple big stock analysts, one from Bank of America, one from Morgan Stanley coming out and changing their position. They were ultra bearish, now moving to somewhat of a bull, short-term bull situation. None of this stuff really matters if you're a long-term investor. And that's one of the things that we're going to try to get across to you. I got a lot of earnings, tech earnings coming down the pike this week. And as they roll in, we'll talk about them as well. But today, we're going to do a little bit about fundamentals. We're also going to talk a little bit about what's going on in China. I'm going to give, again, my take. And I, for a long time, have had a similar take, kind of like Kyle Bass. Familiar with Kyle Bass? Is a money manager out of Texas. And he and I've seen eye to eye over the years on a lot of things in terms of geopolitical, in terms of energy, and most certainly in terms of China. We'll talk a little bit about that as well. What else? I'd also, a little bit on tax cuts and inflation and some follow-ups. But let's start off with this. And I did allude to this. I did talk about this a little bit this past weekend. What if? It's a game of what if. What if I were to tell you? What if I were to tell you the stock market indices will do nothing over the next 10 years? What if we have a situation like it is during, the late 1960s to 1982? What if we have a situation 2000 to 2010? What would you do? What would you buy? Would you go out and sell everything and, buy yourself a bunker and buy gold? Because they were pitching that actually, in particular, in the 2000s, without a doubt. No. People, it's not out of the realm of possibility that we have a decade of subprime returns. It's part of the terrain. It's part of investing. When I talk about subprime returns, I'm talking about the major market indexes. Now, again, this is where you have to be smart as an investor, and you have to understand value. You do. As far as I'm concerned, you're going to own the major market indexes. You're not going to do well. You're not going to do well. If you own high quality companies, if you pay attention to value, if you own companies in particular that are paying dividends, you're going to do quite well. I mean, I've been here. I've done this before. It's what works. The reality is investing, this is an old axiom there. Warren Buffett mentioned it. Said investing is simple. Investing is simple, just not easy. And he compared it to dieting. It's real simple. You want to lose weight? You exercise, you eat right, you burn more calories than you're taking in. Simply said, right? But it's not easy for a lot of people. Investing's the same way. It's really simple, but for many people out there, due to the human condition and due to everything that they're bombarded with and conventional wisdom and all the garbage, they don't do it very well. And we see that again and again and again. However, simple, but not easy. What's speculating? Speculating to me is just plain dangerous. And we're seeing the adverse effects of many investors right now for all the speculating that they've done over the past few years. And it doesn't matter whether it's stocks. It doesn't matter whether it's real estate. It's dangerous. And one of the things I try to get across to people, and certain people will come to me with an idea. Oh, Chris, what about this company? What about this? Okay, I take a look at it and I say, well, okay, there's some possibility there, but you're still speculating here. This is still a wild, wild west. Whatever you decide to put into this investment, if you choose to do so, you better be prepared to lose. That makes sense to everybody? That's what speculation is. If you go in, you better be prepared to lose. I'm going to give an example right now of a company that I did not invest in right away. This is going back to the 1990s. Amazon. Why would I invest in Amazon right away? It wasn't no guarantee that Amazon was going to be the surefire winner. The stock was pumped up by a Henry Blodgett, a Merrill Lynch analyst, and they kept driving the thing higher. It had an absolutely ridiculous valuation at the time. There were many internet retailers out there. Nobody knew who was going to be the winner. I avoided it. Later on, when it became an investment rather than speculation, that's when we went in with our clients. Now, again, if you're in a position, and many of you are, and there's nothing wrong with this. Try to get this across, okay? You want to take a small portion of your portfolio and you want to speculate on some things that you think might work, fine. But know well and good that you could lose all of that investment. It's as simple as that. Putting money out there, oftentimes, you have to, again, it's important of understanding value. It's important of understanding value. Sometimes it's a hell of a lot more risky than people realize. There's their line, Philip Fisher. Stock market is filled with individuals who know the price of everything, but the value of nothing. And that's, quite frankly, it's one of the things that we've been quite good at over the years. Guys like Warren Buffett have been very, very good at. We're good at buying companies and seeing value. As far as timing the market, not so much. Not so much. And again, it all goes back. It's simple principles. Benjamin Graham talking about value. And again, many people don't even know who he is. Looking at companies that have little debt, buying and holding assets of high quality, companies that are paying dividends, understanding the intrinsic value, buy below, sell above. Again, all simple stuff, but for many investors out there, more often than not, it's not easy for them. And these are professional money managers as well. This is why they flail around and we see them fail again and again and again. We'll talk a little bit about risk here. Differences between bravery and recklessness. Brave people, again, this goes back. Remember the commercials? Fortune favors the brave. Brave people, they actually recognize and acknowledge that there's risk out there. Did you see Matt Damon or any of these other people that were shilling for cryptos or other crap that they were shilling for? They talk about the risk that was involved. Brave people also respect the risks by preparing for them. Again, we talk about financial preparation, understanding that there's black swans that are out there. They're going to come around. And brave people follow through in doing as much as they can to mitigate the risks that are out there. Not to mention the fact that bravery and recklessness involve accepting some uncertainty. That's the reality that's out there. We've worked long and hard over the years to try to do the best we can to mitigate risk as best we can. Does it always work? No, it doesn't. But people, there's a right way of doing things and there is a wrong way of doing things. I wrote a column not too long ago talking about what I see. And I made my comparison to Quint from Jaws when he sees Hoopa. Hoopa brings the shark cage. He wants to put the shark cage And what was the line there? It's I have it here. What are you, some kind of half-assed astronaut? Jesus H. Christ, when I was a boy, every little squirt wanted to be a harpooner or a sword fisherman. What do you have there? A portable shower or a monkey cage? It's like anti-shark cage. Anti-shark cage. You go inside the cage. Cage goes in the water. You go in the water. Sharks in the water. Ah, shark. And then he starts singing farewell and adieu. And I can't tell you how many times throughout my career, that scene always pops into my head. I start thinking farewell and adieu, seeing what investors are up to. And again, by every metric, and looking at investors, risky bets, the most popular. The losses that we've seen with robo advisors, right on down the line. Right on down the line. And again, I'll go back to Benjamin Graham and we'll end on this. And we're going to talk more about it this weekend on the terrestrial radio show, which we also podcast. Benjamin Graham, this is speech 1963. In my nearly 50 years of experience in Wall Street, I found that I know less and less about what the stock market is going to do, but I know more and more about what investors ought to do. That's right. Anyway, people, what you need to do is you need to get your financial house in order to do it the right way. And again, we always strongly, pointing in the direction, getting to our website. We have our personal CFO program, your consultation with us, certified financial planners. We also have you full service. You have access to our attorneys. You have access to our accountants, whatever you need. I can't tell you, the people that we have working for us, I can't tell you how much money we've saved clients over the years just in reevaluating what they're doing with their taxes, for crying out loud. There's a myriad of things that we can do for you. And again, just check it out. Go to our website at watchdogandwallstreet.com. Get a lot of great stuff that's there. All right, let's get into China, shall we? Let's get into China. All right. China. Real estate issues. We've talked about this on the program before. We talked about Evergrande and the situation there. Kyle Bass actually talking about it today, how they have two separate markets for Evergrande's bonds. Some of their bonds for foreign investors, they give them a bit of a market, but the ones for domestic consumption in China are zero. This is the largest real estate development company in the world. It's not even close. And we talked about many Chinese citizens that have, they stopped paying their mortgage, stopped paying on mortgages for homes that were supposed to be built for them, and they have yet to be built. Kind of think about it this way. Imagine if you take out a construction loan on a piece of property here in the United States, you eventually want to convert it into a regular mortgage, and you keep paying into it, and nothing is done year after year after year. Chinese people are getting upset, fit to be tied over this. Major issue. Major issue is a story today in the Wall Street Journal why China won't bail out its real estate sector. I don't know what other choice they're going to have. They're in a much more difficult situation than they're letting on. We talked about the Fugazi GDP numbers that they put out. All the numbers that they put out are an absolute lie. However, the new crop of characters that have come in, these are hardliners. This is most certainly a massive shift and turn back to, in essence, you haven't had a guy this far to live since Mao. You think of Deng Xiaoping? No, it's probably Mao. And you got a surveillance state that's there. At some point in time, you start seeing things fail. What do dictators people do in situations like this throughout history? They distract the population, and no way to distract the population by maybe deciding to take Taiwan. Again, do I think that it's a bit of more of a possibility now than it has been over the past, you want to say several decades? Yes. I think it's a much greater possibility. We here in the United States, we better prepare. We are. I mean, we're not the only ones. Other companies, other countries as well, understand that Taiwan Semiconductor, that's, they're the big man on campus when it comes to chips and the type of chips that they produce, which are integral to our computers and networking equipment and military equipment. And again, I still think about this to some degree. Just how stupid can we be as a nation? Just think about it. These are people that you vote for. These people go to Ivy League schools, and you're told they're so much smarter than us. Does anybody think that it was a good idea to outsource this type of chips? These types of chips to, all right, Taiwan Semiconductor, they're the ones that are making it. And in essence, a small little country that many nations around the world don't even recognize as a country, that China, one of our adversaries in the world, believes is a rogue province and wants to take it over. It's enough we can make fun of, Europe and their stupidity of completely relying upon Russia for their energy needs. Isn't it almost equally as dumb for us to outsource this to Taiwan Semiconductor? Well, we're trying to move in the opposite direction of this, but it's going to take some time. Anyway, again, people, you got to be careful. China's got a lot of issues right now, and I think it's going to be very, very difficult for investors moving forward. I'd be very, very careful what type of exposure you have to China in your portfolio. Anyway, let's talk a little bit about tax cuts in the UK. This new fella that's come in here, this Rishi Sunak, the new prime minister. Again, he was also in essence, their Treasury Secretary, expositor, whatever they call it, I'll forget it. I don't even bother trying to pronounce it right now. It was the policies that he went along with that, in my opinion, have helped put the UK in the position that they're in right now. You see, that's the thing about Brexit. Okay, I thought Brexit was a wonderful idea, but if you're going to go in that direction, if you're going to go and you're going to head in that direction, you better change the dynamics of your economy, and you better become what the dream was, to almost become like like Hong Kong used to be, or Singapore. Okay, a place where getting rid of regulations, business could be done, a moving and grooving economy, and they didn't do that. They didn't lower taxes. They didn't do the things that were necessary. You've had this Tory rule in the UK for an extended period of time. Now, okay, you get rid of Liz Truss, you bring this fella in. I don't see much of a change. Now, if you are a citizen of the UK, where prior you were a member of the European Union, you can move to Europe and you can get a job elsewhere. I don't know how that exactly works right now. It's probably gotten a little bit tougher to do that. I know that my wife's cousin, who's a Greek citizen, he was been working over in the UK prior to Brexit, and his grandfather, and he can stay there and continue to work. It's not a problem. It's going to be very, very difficult. Very, very difficult to get anywhere if you're going to continue to have this massive welfare state and massive amount of government spending and continuing to tax people. Let me explain to you something. Tax cuts don't cause inflation. Putting money back into the hands that people that will spend it wisely is a hell of a lot smarter than leaving it in the hands of government officials that are not accountable, that do not have skin in the game. What leads to inflation is this type of ridiculous spending. Well, first and foremost, it's the money printing and the taxes that cause inflation. It's a misallocation of capital. You want money to flow to the right places. You don't want the government to dam certain areas, divert it certain areas that they think at that point in time is the right thing to do. Because when they discover it's the wrong thing, they don't change. Okay, we talk about this all the time. We never see government programs go away, do we? We never see them go away. They just continue on forever and ever and ever. And there's no accountability. Whereas, again, you want to quote Gordon Gekko, in the private sector, you do it right or you get eliminated. Unless, of course, caveat right here, unless, of course, you are in the private sector and you're tied in to government. You're tied into government and the government has invested in you and is protecting you. Again, it's like having a, impenetrable moat around you, wall and a moat. You're not going anywhere. And that's not good either. That's not good either. Again, creative destruction needs to happen. Okay. Companies need to fail. Businesses need to go under. That's how things improve. Anyway, let's talk a little bit about a couple follow-up things right here. Again, this is pretty pathetic. It's going to be bad this winter. It reminds me, holy cow, I gotta order a couple cords of wood. I don't like wasting money. I have a fireplace. I might as well, use it. I've already seen it started this past summer. I have heating oil at my house. We don't have natural gas here, but again, there's no difference between natural gas and heating oil right now where I am as far as costs are concerned. For my hot water and my heat here. And my bill has gone up, 25, 30% easy. And it's expected to go much, much higher. And, I'm on Long Island, New England, it's supposed to be much, much worse. Mind you, again, they don't put the pipelines up to New England to get the natural gas there. Again, we as a nation continue to shoot ourselves in our own foot. What they're planning on doing right now is, again, stupid is as stupid does. Democrats are now asking Biden for another strategic oil release. Yeah, and this is heating oil. The strategic reserve holds about 1 million barrels of home heating oil. This is our solution to the problem. It's not fixing the problem. It's not dealing with supply. No, it's not. And then I watched that a-hole Brian Deese on CNBC talking about transformation to green energy and all this BS. Shut up, man. We're not even close, dude. We're not even close. You guys are going to have to start hoping and praying for a really warm winter. You better be praying for global warming. They changed it from global warming to climate change. You better be praying for global warming at this point in time because it's going to get ugly. It really is. So another story as well here. It's, again, follow up on real estate, which we've talked about. Home buying demand remaining robust in low-cost cities. However, some of the more expensive ones are coming down, and we're starting to see, people, it could be a 20% drop next year. Again, who knows? Who knows? What I do know is that, again, we check around a myriad of different markets and certain areas that were very, very hot. You guys seeing a lot of homes remain on the market, starting to see prices coming down. It's natural. It's okay. It's not the end of the world. Okay. It's not. It's your home. It's not a bank. Can we make that perfectly clear? Okay. It's a home. It's a place. It's a bill. It's a bill. And even if you're, if you're a retiree and you're down in Florida, okay, and the house that you bought a couple years ago, let's say I'm gonna throw it out there, but you got to expect, you bought a house for $1 million. You bought a house for $1 million. Let's say it drops by 20%, and now you could sell it for $800,000. What difference does it make? You're living in it, right? Does it make it? Did the house shrink by 20%? No. Okay. It's a place to live. All right. That's people that you've got to get your arms around this. And again, this weekend, we'll get into some real estate reality on the terrestrial show as well. Have a wonderful day, everybody. WatchDogOnWallStreet.com is our site. WatchDogOnWallStreet.com. Again, reminding you, take advantage of all the great stuff that we have there. Sign up for our podcast, personal CFO program, a myriad of different things. Check it out. WatchDogOnWallStreet.com. Have a great day.